Thank you, and a huge shout out and congrats to the folks behind GFF and to you too, sir, because I know a lot of your hard work has gone into this. GFF this year is bigger, better, brighter than it was last year. So hope more power to everyone behind GFF, and we truly benefit from it, right? Of course, the topic here today is around um, lending as we know it, right? Lending has, of course, transformed in the last 5 to 10 years. If I was to look at, I remember when I was looking to get an education loan way back around 20 years ago, the one bank that the one organization I could think of was State Bank of India. And finally, they gave me a loan of around 25,000 rupees when I had asked for almost a lakh. And a lakh was a huge amount at that time, right, around 25 years back. And it took me almost, not a reflection of my educational output, but it took me almost 3 years to pay it back, right, because costs had changed at that time. But today, access to capital is much faster, is more efficient, and the collection and the ability to even pay back, I would say, is much more efficient than it used to be around 10, 15 years ago. And there's a lot of technology and I would say a policy-related developments that are making it so. So the conversations that we're going to have today with this esteemed panel would be a reflection of India as it stands today, the world, and of course, all of these aspects as we see them developing over the short term and mid term in the near future, right? So again, the way that we are going to be running this panel, I'm not going to go the slightly boring round robin way. I'll probably pick and choose basis how we are seeing the conversations going. But I think the first question to you, Dr. Phukon, and thank you so much for being here, to yourself, Bipin and Bobby, is how do each of you perceive digital lending? One from the standpoint of benefit, and most importantly, because of this, so much of technology at play today. It's the journey between tech and digital, right? And as the interplay of tech and digital in terms of more digital channels coming to play, so do the risks increase. So how do you see digital lending panning out in the next 18 to 36 months?
Thank you, Vishnu. Before I attend your questions, let me extend my sincere thanks and deep gratitude to our organizers for having me here. It's really been pleasure to be part of the panel discussion on such an important area. As you are rightly speaking that, all of we know credit fuels economic growth. And if we see the cross-country historical data, there is a direct and positive relationship between private credit to GDP ratio and the growth of a nation. Having said that, if India today, stands at $4 trillion economy, if we aspire to grow further to become a $25-30 trillion economy by, another 15 to 20 years, then the private credit to GDP ratio shall also be, triple or quadruple. So that means that the current private credit to GDP ratio, which stands at 50%, shall grow up to 150% or more. While saying so, going forward, credit will have both phase, physical, where, depending on the ticket size and the tenure of the loan, and, most of these big ticket size, long tenure credit will definitely, where personal interactions do have certain comforts, and where more documentations required will be, will occupy its, present positions of going ahead with physical kind of interactions. But small ticket size or mid ticket size loans with short tenure, interim finance kind of things, typically in the untapped geographies, untapped sectors, segments will play a critical role in terms of digital lending. While saying so, there are a lot of initiatives taken at different level, at the policy level, at the government of India, and also at the regulatory level. I think a few of the recent, initiatives for instance, enhancing the exemption limit from 7 lakh to 12 lakh, then the recent GST cut will enhance, a lot of disposable personal income in the hands of individuals. Then, somebody who aspires to have more, consumptions, they will require more, little more credit. So going forward, there will be a lot more demand because the consumption behavior is going to multiply, and when there will be more and more, productions, both at the commercial level as well as the individual level, credit is going to play a very, very critical role. And going forward, I think the digital lending, which typically catering to the segments, maybe the lower middle class, the gig workers, the informal sectors, MSME sectors, really going to play a very, very critical role. Thank you.
Thank you, sir. And so we heard from the policy standpoint, and that was a very quick summary of how policy is maturing, what policy has changed. Bipin, to you, you are the fintech in the room, right? So it's quite amazing that we've got the policy, we've got the fintech, and we've got the bank, right? So after you, I'll probably want to come to Bobby, but your perspective, you're of course a payments superstar, but your perspective on how you see, because lending and payments are very closely interlinked. So how do you see lending transforming?
Thank you. Firstly, thank you for having me here as part of this panel. So when I look at digital lending, we can look at it from the lens of first the customer who wants money, and secondly, we can look at from the point of view of the lending entity, the entity who's giving the loans. And I think it's massively beneficial for both. From a customer point of view, there are so many advantages compared to how this process has been run physically that at some point in future, we will imagine and think, how did we even do this before digital was there? Because basically, it's about personalization, that who you are and what kind of loan you are looking for and what price you are willing to pay is deeply personal, right? And depending on whether you're doing a property loan, whether you're taking an unsecured loan, whether you're taking a car loan, and all of this is possible digitally today with the personalization and also choice, thanks to the digital lending framework that has been created with the help of DFS and with the help of RBI. Those guidelines clearly articulate how to create the key fact statements and the choice of loans that a customer can take. So you come on MobiKwik app, it's not about just getting a loan at any price. You can actually go and see different lenders, what amount of loan they are willing to give to you and at what price. This kind of comparison was earlier not available to individuals because they would have to put in a lot of effort to get the different kind of loan offers from different entities. So I think that is one major advantage. The second is really, people who, let's say you need the money right now for a particular purpose, for an emergency. There is no way physical lending is going to help you. You need money at 1 a.m., 2 a.m. in the morning. The only way you can get loan is through digital, because effectively that is how the whole process can work, digital end to end. So the amount of convenience it unlocks for a very large population who's otherwise currently devoid. So I think it plays a massive role from an inclusion point of view, in addition to the convenience. The second part, I think, is also underwriting, risk and underwriting. And I hope George will throw more light on it. But I do believe that when you are doing manual and physical underwriting, when you're doing risk assessment, human beings can only do so much. They cannot process 500,000 data points. They cannot look at every single alternate data point beyond income, beyond the more traditional scorecards that have been created in lending, which is possible in digital. And it's possible to do it in digital within minutes, rather than doing it through an army of people. So it's lower cost, and it's faster, and it's actually better because you can train the models, you can create predictive models which can perform and will perform better over a period of time compared to any manual scorecards that have historically been created. So I think these two are significant advantages. The third is also, I want to throw a light on collections. from the regulator's point of view and from everyone's point of view, ultimately we want to make sure that customers pay back the money. And collections is ultimately at the heart of how you get the money back and how the loans perform. So what digital lending enables, and through properly constructed digital collection CRM and possibly use of AI, you can actually make collections infrastructure, collections interfaces much better and personalized for the end consumer, which is not possible through a traditional call center. It is not possible through a traditional field agency model. So to me, from all angles, digital lending is superior. It is the future. And I would say it's not just applies only to short-term or smaller ticket loans, eventually even all kinds of loans. I mean, simple things, right? Today, one of the emerging opportunities is loan against mutual funds or loan against securities. People want to take a loan because they have invested in mutual funds and they have invested in shares, or loan against gold. All of this is possible today digitally. Earlier, it was not possible, right? Because you have to go to a branch and basically physically deposit your shares before you could get money against it. So I'm very bullish on it, of course, and I think the future is very bright.
Absolutely, and that's again very, very insightful from the front lines, right? So I just wanted to, and before I go to Bobby, I just wanted to maybe flip the question a bit, because I'll go back to what we were discussing in the speakers lounge, right? See, it's not just consumer behavior, it's also the age of the consumer that's changing, right? As you look at a demographically rich population, aspirational that too, right? The needs are also changing. The traditional products will also change, right? I mean, CASA, as we know it, will probably disappear, right? Maybe in 5 to 10 years' time. Now, looking at the same question in terms of lending, policy, etc., from that standpoint, so we are looking firmly into the future, Bobby. And I know, because I work closely with you, the way that the bank is thinking. How do you see this entire transformative approach panning out for yourself and for the country?
Yeah. So first of all, thank you, GFF organizers, for inviting us. And ESAF Bank considers a great privilege to be a part of this great event. And thank you, Vishnu, for being asking the question. And for me, it's I agree with Bipin saying that it's a bullish, no doubt about that. But I talk more on the inclusive side, financial inclusions and the Viksit Bharat, which our government is batting for it. Digital lending, no doubt about that. It'll be there, but I think we need to go beyond just lending to understand the behavior of the customers, and it's not the loan is going against the its application. It should be against their repayment capacity. So as I rightly mentioned, the digital lending and what we call the AIs or whatever comes in that really helping to fine tune that. No doubt about that. But at the same time, we need to safeguard also. We should not erode the responsibility of all stakeholders. So now it's more on the lender, I think, or the underwriting is happening. But I think we should focus on the responsibility of everyone, and that could be the more appropriate manner we do it. I agree that the trends are the pressure of keeping the CASA ratios on the banks are very high now. I know it, and it's not cheap cost, and it is not a cheapest funds, because a heavy cost, because we have to put branches, we have to put people there. When we are in NBFCs, we need only 3 people to raise the fund for all the entire funding need. But we are around, in the branch bank, we are around 4,000, 5,000 people are there. So it's costly at first, no doubt about that. But in India, people want to have the trust. They don't see the branch, they see the bank. So that's the one area we're looking on it. But going forward, the digital infrastructure in India can really help us to build the bank, not only the bank. You should focus on the Viksit Bharat, which we are talking about, and the inclusion, the financial inclusion, and that's more important for me when you talk about the digital lending. So that can reach, with a responsible lending. That's what I want to share with you.
Awesome. So I'll now come back to that word that you left off with, right? Responsible. So, and that's an important part of every conversation that we do. As things become faster, better, cheaper, it is also very easy to, and I am a customer, right? I get at least 5 calls from multiple agencies saying, Vishnu, would you like, I mean, your credit score is amazing. Would you like to take a loan? Because, your salary really seems to be doing well. You seem to be doing well in life. Would you like a loan of 25,000? So there's, of course, a discrepancy between the actual amount and my repayment capacity, like you said, Bobby. But the question is, how do we put in the guardrails that are required to make sure that, number one, we are targeting the customers in an appropriate enough manner, and number two, once the loan is indeed given or lending contract exists, how do we ensure that chasing is done in a sustainable manner? Okay, of course, see, not everything will go hunky-dory. There would be a 5%, 2%, 1.5%, and profits are important. Bottom line is why we are all here. But how do we make sure that both ends of the chain are tied together in a responsible manner? So, sir, from a policy standpoint, I'll come to you first, because I know some of the conversations that we've had, right? That is one of your number one priority areas, right? While, of course, you're the super regulator, if I can call it that. Where do you see financial services evolving, keeping in place those guardrails?
Thank you, Vishnu. It's a very, very, critical element in the entire credit ecosystem. What we feel is that, the first guardrail should start from the institutions itself. So the credit has to be, a purpose-led credit, an activity-led credit, rather than a push credit. So that should be the first, guardrails. Then technology will play a very, very critical role. Like Bipin was saying, that AI perhaps will, bring certain customized, behavioral assessment of the loanee during the, onboarding and extending the loan. What kind of, conversation, behavioral approaches. That is the second, guardrail. The third guardrail, maybe it's not, credit is not for the purpose of credit, actually. Credit is given either to actually, grow for certain businesses or to meet certain purposes. So beyond credit, we have to actually behaviorally change the mindset of the loanee that, there is something beyond credit, which is the relationship. And, if required, some kind of mentorship, advising on some other matters beyond credit will definitely, build trust between the institutions and the individuals. So those are the guardrails that, should emulate from the institutional level. Then from the individual level, there are a lot of, issues in terms of we have been hearing, mushrooming of lot of, unauthorized, lending apps and all those. So somebody has to, make sure that, they are lending to a right kind of a platform where they can not only, get the money, but also they ensure that the data, the financial and the personal data they are sharing in the process of, getting onboarded or the loan being extended is actually, keep safer actually. It's more often the data are being collected and, the apps or lending platforms goes off the situations, then, they are being used for some other purposes. I believe those are the guardrails. It's more a kind of a, soft, nudging, soft and nudging kind of a, skills that requires to build in between the institutions and the individuals opting loans. Thank you.
Thank you, sir. And I'll now go to Bipin, because he's the person who's building out the front-facing apps, the front-facing framework, right? So Bipin, I'll go back to your example where if somebody wants a loan for whatever reason, say 1 a.m. at night, and going back to what Sir said, it's not just an entity, it's a human being at the other end, right? So from a MobiKwik standpoint, what would be maybe the top 2 things or considerations that you keep in mind when you are, because of course you're the founder, you have to think ahead, right? What are 2 of the considerations that you keep in mind while you chase the customer in a sustainable manner?
So, when people need a loan, then I think the most important thing when it comes to responsible digital lending is to make sure that you do this assessment in a responsible way in order to give loan to someone, A, who needs it, and B, clearly has the capacity to repay, and is clearly also showing good behavior as far as credit score is concerned. Now, that obviously means that a lot of people who are new to credit and or are defaulters or showing bad behavior on the credit score, they unfortunately have to be rejected. But still, even if your credit score is good, still I have to assess and ensure that I have a model in place which can assess the customer in terms of the right parameters and decide whether in the past this cohort of customers is able to pay the loan back. It's very important, and it's a highly data-driven exercise. We have built our own in-house models which we rely on. And along with this, we need to understand and know really who the customer is. Because one of the big pitfalls of also digital is fraud and impersonation. So if somebody comes with a particular identity, whether it is an Aadhaar, whether it is a PAN, so you have to ensure that it's the same person who's applying for a loan and being able to get the loan in their bank account. So I think all these different assessments, each one of them is highly critical before you decide to give a loan. And the second part of it, is of the responsibility is actually how you get the money back. Now, like Sir said, and I think George Sir also alluded, a large part of it is firstly, you've done the assessment, but the second is for whatever reason, people can fall back behind their repayment schedule. One of the biggest things that entities can do and apps like us can do, we can digitally prepare the mindset of the customer that it is your obligation to pay the loan back. Not when you default, but much before you default, right? And you start showing behaviors like this cohort is going to bounce and not keep up with their EMIs. So you start doing digital nudging, then you do calling nudging. So there is a whole host of activities which has to be personalized to that set of customers and has to have the guardrails in place so that it doesn't fall into any kind of behavior which is either threatening or unauthorized or completely illegal. Because that is the other extreme where, historically, right, in physical collections and as well as in call centers, there have been no guardrails in place. But actually, one of the big benefits with the digital lending is that you can put so many different guardrails in place, and you can actually use AI to personalize who to target and how to target in a very systematic manner.
Perfect. I'll, of course, come to the question of cost as well, because you used the word AI in a couple of areas, and that's the hot topic everywhere. We've not used that word so far. And that must be a record of sorts, right? 25 minutes into a panel, and no one's used the word AI, right? So, Bobby, but before that, I'll probably come to you. Because, see, you have large microfinance roots, right? And digital and microfinance, of course, there's a lot of innovation happening right now. But from the standpoint of you flipping customers from a traditional microfinance model to a digital channel for either the sourcing or the collection or the relationship, where do you see that transformation happening, particularly from an ESAF standpoint?
Yeah. So the transitions happens not on overnight, it takes a long time because we need to build a trust. That's the most important thing we have to look on, and especially on this the micro banking or microfinance segment. Building the trust is more important. That takes some time, and people should, even though from day one of it became a bank in 2017, our sourcing and decision making all on 100% digital, and disbursement also digital with the e-sign and with many partners they are here. But the collection is only, we are 37% only collection happening to digitally, because still the ecosystem is not changed. Still the cash economy is still there. Even though our UPI went deep into the rural pocket, but still cash economy is still higher. So that takes some more time for them. So building the trust, that's more important to moving from the traditional lending to a digital one. For that, I think one good thing in the bank sector is there is always a maker-checker concept. In digital also, lending, we should have a guardrail like that. Even though sourcing that as he mentioned, Bipin mentioned, or Sart mentioned correctly, we need to have even though it's AI or on the automated, there will be someone has to check that whether that's everything happens or not, even though it's digital. And for that, you need a responsible coding has to be there. So I said, the compliance should be also part of that. Whether we can have a compliance coding. That's what I'm looking for it. So it takes some time for that, but building the trust among the people and giving that trust is the responsibility of the bankers like me to ensure that this transition happens smoothly. But that's happening. When we do a survey long back, around 94% of my microfinance customers using WhatsApp. Okay, now we have Indian WhatsApp also comes in. So we need to how we can utilize that platform to build the trust. So that's more important on the transition mode.
Perfect. So yeah, that's pretty much how most of the world runs, right? WhatsApp and FaceTime. So I'll now come to maybe I would say one of the most important points here around lending, and it's about policy. So I'll let Sir go last, right? Because he is the policy maker. So I'll now come to Bipin and give Bobby a small breather. But Bipin, how do you see policy evolving? I was thinking in my head, what are two things that you want to do from a policy improvement standpoint? But I thought that'd be too direct. But how do you see policy evolving? And then I'll come to Bobby, and then finally to you, sir, to say, because you are sitting in the policy making body, right? Where do you see that entire journey? Because that's, I think, where we need to get to.
So great question. So digital lending is very, very nascent. It's not even I would say 10 years old in India, hardly. So it's just above a toddler age. And when it started, a lot of the policy was not necessarily in place in terms of how you can take loan on an app, who can give a loan, and at what price, and how you can do the collections. But I have to give it to DFS and to the regulators RBI that we have come up with a very clear policy in terms of how digital lending is supposed to be operated, and it was not created in isolation. It was created in consultation with all the industry players. There were drafts which were circulated. It took, I think, 2 years, and before. Even things like FLDG or risk sharing and all different aspects of digital lending were put into place. How the partnership model works, who owns what, right? What is the responsibility of the lender? What is the responsibility of LSP? Terms like LSP, lending service provider, didn't exist earlier. So at least from my side, the way I see it is having such a clear policy actually makes our job much, much easier, because you don't have to think about what to do and what not to do. And of course, these policies are created with the interests of the customers at heart, which is how it should be. And I feel that today, the level of transparency that exists in terms of how this policy is being operated or even enforced, and how aware all the different parties are, that is really, at the next level. Nobody can say we are not aware how the policy is to be implemented. So from our point of view, I think, of course, there's still nagging places where we can still improve a lot of things. But I think from an overall digital lending policy point of view, almost everything is in place.
Perfect. And what you said is absolutely right, Bipin. So I think we've had the benefit of having very benevolent regulators, right? And the regulation that comes out first goes in for public consultation, and then it becomes law over a period of time, right? So, and we've personally seen that in places like, say, DPDPA as well. So, Bobby, to you, particularly because you are straddling, you're going to become a bank, hopefully, very soon, touch wood. So, where do you see policy evolving?
Now, one thing we should appreciate our government regulators is that they're very proactive. Okay, so I think the way they take it up the policies for the development of the Vikasit Bharat, I quote that always. It's very proactive. Okay, and when compared to many countries, we are far better on that. I think what I feel is that we need a policy which can be it's a part of our journey of everything, especially we should build the compliance side in the part of this, whatever we do, especially when we talk about policies, which will enrich the country's vision, what we want to achieve. It's very clear by 2047 we want to be Viksit Bharat. Okay, so the policy should be fine-tuned in such a manner that that should be achieved. So even though our regulators and the governments are proactive to multiple policies, but they can we have a compliance by design? Okay, instead of compliance by filing, but we know that we have to put a lot of compliance to the regulators every month. It's all filing. Can we build a compliance by design so that the policies can part of this compliance by design and that can fulfill the path of the Viksit Bharat?
Absolutely, and that's a good point, sir. So maybe you want to take on from there itself.
Yeah, I completely agree. Digital lending, what I believe is that it should be, secure by design and, security of the consumer. That should be the philosophy of the digital lending. But coming back to the policy perspective, as Bipin was saying, that digital lending, I agree it's a nascent, but again it's evolving very fast. In terms of the regulations, and regulations keep updating very frequently. We have seen a lot of new elements like FLDGR, responsibility of LSPs and regulated entities. Besides those, so there are certain elements when you enable certain businesses for certain, clients, then the responsibility is to ensure that those businesses are actually, sustainable. And having said that, one of the important priority both for the government and the regulator is to ensure that there are sufficient data available for the lending institutions to improve the underwriting and assessment, capacity. And with that, a lot of initiatives have been happened. Account aggregator is, one such example. We have recently the government launched the Jan Samarth, which aggregating, different kinds of loans, including the KCC loans. And the kind of progress the portal has made in last 1.5 years is tremendous actually. And not only that it's aggregating, but it's actually integrating some of the data stake like agri stake and all those. Going forward, another DPI unified lending interface that is also going to play a very, very critical role in the digital lending space. So maybe at times to come, we will see, lending will be more democratized. It will be, on the tip of a, fingerprint on the mobile set of individuals. Like, we have seen how the payment has actually, transformed. So having said that, idealistically, we believe is that, as in my opening remarks, I told that we see lending should be need-based rather than a push-based, and there has to be, certain, priority being given by the institutions in the, collections mechanism. So, collection of a push credit should not be at the expense of inability of an individual to pay. So that is how we wanted to actually ensure that the innovations, regulations, and the customers priority are being actually matched. And this is really going to play a very, very critical role going forward. Thank you.
So thank you, and I think we've just got a couple of minutes, so I'll just have maybe one quick fire question, and this is more about innovation to each of you. It's the same question. So Bobby, we'll go with you. Standpoint of an innovation that's waiting to happen in digital lending. It's not yet happened. You can see it coming. What do you think that could be?
As I shared with you in the morning, even the fintechs, what they innovate is solely to automate the process. Okay, so that became, but I think we need to go beyond that. Okay, it's not an automation of what banks are doing. I think before that, going for our stakeholders with have equal responsibility in digital lending. Now, as Bipin and Sir was mentioning, it's a platform. Okay, because they are platform, they can't say we don't take responsibility. No, even though underwritings happen with the bank, But because I am using the platform, everyone has to be equally responsible for that. And that could be the one area I think looking forward to happen in coming years.
Sure. Bipin?
So for me, I think one area which will kind of unleash significant growth in lending is today, when you see digital lending, a lot of digital lending growth has come in unsecured, which means it's not against any asset. But in parallel, if you see, digitization of assets is happening at a very, very rapid pace. Right? Of course, securities, mutual funds, stocks, they are already digitized. And so loan against these digital assets has become popular already. And it's safer. It's easier to underwrite, right? Because there is already an asset against which the customer is borrowing. Of course, there is loan against gold, which is in the process of getting digitized. Property, not yet. Right? Other assets, not yet. So I see that in the future, secured credit in parallel with digitization of assets is going to become a very big play for everyone involved, and it will actually have a much better outcome than pure unsecured.
Thank you. And sir, finally to you.
In the digital lending space, what I actually looking forward to have more and more hyper-personalizations. Requiring understanding the needs of individuals or the customers. For instance, in insurance, when we look at to buy any insurance product, we typically give certain informations that tenure, premium tenure, then the coverage period, then the amount of premium. Then it actually gives us what kind of policy actually fits accordingly. So going forward, typically as a individual looking at certain loan products, I believe the system, the platform has to design, the loan product in such a way which actually requires by the individual, and the same time actually, ensuring that there is a ability to pay, there is a quality credit assessment.
Perfect. So I think, that brings us to the conclusion of this, and I'd like to say that it's not often that I get a chance to ask questions of 3 clients. All of these folks are my clients. I'm usually in the other side, and they are asking me, Vishnu, why is this not done? Why is it not done? Etc. It's so heartening to be on the other side for once, and I hope we get to do this more often. So thank you, gentlemen, for this amazing opportunity and for the interaction. And again, thanks to GFF for coordinating this in such a nice cut-to-cut manner. Thank you so much. Thanks.
Thank you so much. Let's give a round of applause to our panelists and moderator for keeping the session not just interesting, but also very honest. I request all of you to stay back on stage. Step forward for the photo op. Ladies and gentlemen, we are about to do a report launch followed by this session. And in order for me to facilitate this report launch, I'm going to call on stage some of my guests. But before that, let me tell you what is the report about. It is about India's fintech evolution from growth to resilience. And before we release the report, I would like to invite on stage Mr. Ashok Chandra, Managing Director and CEO of Punjab National Bank. Mr. Akhilesh Tuteja, Partner and Head, Clients and Markets, KPMG. Mr. Heyman Jhajaria, National Head of Consulting, KPMG. And Mr. Sanjay Doshi, Partner, KPMG. Can we have a huge round of applause